What is going on, ladies and gentlemen? Welcome back to the channel. My name is Liam and this is Young Money Investing. Today, I finally got around to filming an update for my professional options trading series. This is kind of me documenting my journey as I attempt to transition from a, kind of typical 9 to 5 hourly salary type of job into a full-time options trader. So if you haven't seen my first episode yet, I'll leave a link to it down below, or it should pop up on the screen right now, depending on how good I am at editing. But I would go watch that first before you come back to this video. So with that introduction out of the way, let's dive in. Let's see what's happening right now. And we'll kind of catch you guys up on everything that's happening. So right now, if you look at my account, I am currently sitting at $1,900. When I started this, I had about $2,100 in this account, so I'm down about $200, which is not terrible. I was a little bit hasty, we'll say. Made some trades that I, looking back, probably shouldn't have. There was some bad execution and otherwise. I'm not going to go into everything that's happened in, wow, it's been almost 2 months since I last filmed a video for this. But we're not going to go through everything. I am down about $200 right now. But we'll kind of focus on what's happening right now. So we'll jump back over here into the stop. This is the chart for Revlon. This is the daily chart for Revlon. Now, Revlon is a stock that I am currently running the wheel strategy on. If you're not familiar with the wheel strategy, it's basically a strategy, and this is a hyper simplification, but it's a strategy where you sell puts against the stock over and over and over again until at some point you get assigned and you have to buy the stock, and at that point you start selling calls against your shares over and over and over until you get assigned again, and at that point your position is flat, and that's known as a full revolution of the wheel. So that's what I'm doing right now. I was selling puts for probably close to a month. I have a little spreadsheet set up for this so that I can keep track of my personal P&L on this, because if we go back to my account and you just kind of look at the positions, it says I'm down $172. That's not accurate, but it thinks that because of where my shares were assigned versus where the share price currently is, and it's taking that difference and saying, well, this is the loss that this is your open P&L. You have an open loss of $172, or I guess technically 198, but that is not super accurate. So we'll jump into my other spreadsheet in a second, so you can really see how it works. But there's been a lot of news with Revlon. They filed for Chapter 11 bankruptcy, going through some restructuring right now. So that is something I'm aware of, that I'm kind of keeping an eye on everything. But looking at the share price and the premium that I'm able to collect because of this heightened volatility has made this a very, very worthwhile trade, especially because it's so low price. So normally if you're running the wheel strategy or really selling options at all, you need a little bit of a higher price stock. It needs a much higher level of volume to make it worth your while. Otherwise, the bid-ask spread is just going to be gigantic. You're going to get terrible fills. The whole thing is just not really going to work very well. So let's go ahead and jump into my spreadsheet here. Over here on the left side, this is all the credits. This is all the money that I've taken into my account. And over here on the right side is the debits, or money that I've sent out of my account. So you can see I started running this at the beginning of August. August 2 was, or August 2nd was the first time I sold a put. And then August 3rd, August 5th, August 17th, August 22nd. And then August 29th, in between August 22 and August 29 is when I was assigned my shares. And so from that point on, I've been selling calls. I've sold 5 calls currently, and you'll see that these last 2 on the bottom have an open status instead of closed. So Over here, the only thing you're really going to see is me buying my puts back. Not really sure why I bought these for 20 and everything else for 5, but I went back and looked at my order history, and that's actually what happened, and it makes sense based on all the contracts that I sold. I don't really remember why I did that, but it is what it is. And I was assigned the 28th of August for 200 shares at $8 a share. Now, when I sold that put, I did sell that put for 55 cents. So if we jump back into, you'll see here it says my average price is $7.45. So that's the $8 price that I was assigned minus the 55 premium, but that only applies to the put that I sold that ended up getting me assigned. And so for that reason, that's why I have this separate spreadsheet set up, because it's not keeping track of everything. It's only keeping track of the cost basis minus the puts that I sold to get assigned. So it didn't keep track of all of these extras. And so if you come over here, this is 200. This is the number of shares that I currently have. And I'm trying to sell calls above $5.60. As long as I get assigned above $5.60, I'm going to be profitable on this strategy. I'm currently selling calls at around $7, so that should give me like about $140 in profit. And then up here, this is my adjusted cost basis. This is not a running P&L. It only it won't show P&L until I sell my shares back, or I exercise my calls against my shares, and everything closes out and I'm flat again. At that point, it'll show a P&L or a profit, hopefully. But right now, this is my adjusted cost basis. So I bought 200 shares for $1,119 is basically what this is saying. And I'm just going to keep, honestly, I'm going to keep doing this for as long as it's profitable, as long as we have this heightened volatility that it lets me collect additional premium on my options. Thank you guys so much for watching. I appreciate all of you. Mad love. You guys have a good one. Peace out.